The economic pressure on the middle class is compounding. We are watching the cost of basic survival erode the purchasing power of an entire demographic. Wages haven't kept pace with your monthly bills. Mortgages, rent, and groceries are eating up a significantly larger percentage of your paycheck than they did even 2 years ago. This chart shows the newly announced 2026 IRS limits for health savings accounts. The ceiling is creeping up again, now sitting at $4,400 for individuals and $8,750 for families. That rising ceiling forces a hard choice. Do you squeeze your current budget even further to hit those high tax optimization targets? Or do you step outside your day job and figure out how to generate new income entirely? You really only have 2 resources left to spend right now: your free time and your monthly cash flow. Choosing a financial strategy that mismatches your current liquidity results in either debt or severe burnout. Winning in 2026 means taking a hard, objective look at your bank account and your calendar, identifying exactly which resource you lack, and executing the specific playbook built for that constraint. While many treat the health savings account as a standard checking account for medical bills, it actually functions as a long-term wealth multiplier. Look at this cycle. Money enters tax-deductible, grows tax-deferred, and exits tax-free. Maximize the $8,750 limit, sweeping funds into ETFs. When sick, pay bills with post-tax cash from checking, leaving your HSA untouched. The catch is documentation. Maintain an airtight digital archive of every medical receipt for decades. As long as the expense happened after the account was opened, you can reimburse yourself 10, 20, or 30 years down the line. You are building a massive tax-free withdrawal reserve for retirement. This strategy requires absolute liquidity today. You are voluntarily trapping $9,000 behind a glass wall. If your car breaks down and you have to break that glass to pull out non-medical cash, you get hit with income tax and penalties. The math is clear. The delayed reimbursement strategy compounding wealth brilliantly. But it is dangerous for anyone living paycheck to paycheck. If you don't have the cash flow to fund a tax shelter, your strategy has to pivot towards generating active income, specifically the professional hustle economy. This means taking the specialized skills you use at your 9-to-5 and selling them back to the B2B sector in 10 to 20-hour weekly blocks. This breaks down a fractional partner manager role. Dedicating 10 to 20 hours a week scaling a startup's program generates a monthly retainer of up to $7,000. You handle operations like deal registration, providing immediate cash flow without startup risks. The barrier to entry is steep. You cannot do this without years of senior-level corporate experience, and you have to actually know how to pitch and land these clients yourself. It also demands a brutal time commitment. Fulfilling a 20-hour retainer means sacrificing your evenings, your weekends, and your free time. Professional consulting will yield the highest active cash flow of any side hustle, but it extracts a heavy toll on your calendar and requires a decade-built resume. Without senior B2B skills to leverage, you fall back to the tactical gig economy. These are physically demanding, low-barrier services: mobile car detailing, pressure washing driveways, or running local box truck deliveries. The setup is minimal, and the cash flow is instant. Buy basic supplies on a Friday and get paid in cash by Saturday afternoon. There are seasonal spikes. Putting up holiday lights for affluent neighborhoods in November yields thousands quickly. Your income is strictly capped. You can only wash cars until running out of daylight. Gig work provides the fast cash you need to bridge a gap right now. It does not offer the compounding leverage required to build wealth over the long term. Navigating 2026 requires ignoring generic advice and mapping your specific constraints to a blueprint. The entire framework hinges on one core metric: current liquidity. This flowchart starts with one crucial question: do you have excess monthly cash flow? If yes, you execute the HSA vault strategy immediately. You max out contribution limits, invest the funds, and pay current medical bills out of pocket. If your budget is tight, you must avoid locking up your cash in tax optimization. We move to the active income side of the board. Here, we ask the second question: do you possess specialized corporate, tech, or B2B skills? If yes, you target high ROI fractional consulting. You trade your evenings for a massive influx of retainer cash. If you don't have those skills, you deploy into the tactical gig economy. You use physical energy to generate immediate cash. These three pathways eventually converge. A side hustle acts as the bridge that allows you to pay medical bills out of pocket, providing the financial breathing room to keep your HSA contributions invested so they can compound. In the 2026 economy, blindly following generic financial advice carries risk. True financial security comes from aligning your strategy with your actual limitations in time and cash flow.